Red lines crossing green lines, momentum oscillators flashing, news tickers scrolling at the bottom of the screen, while blinking alerts demand your immediate attention. It is a visual assault. Today, anyone can log in and access the exact same institutional-grade charting technology used by Wall Street. But a massive surge in data rarely levels the playing field. Giving a new trader a dozen advanced indicators doesn't make them sharp. It paralyzes them. When your brain is forced to simultaneously process conflicting signals, a moving average saying buy, an oscillator saying sell, and a news feed screaming panic, logic collapses. You freeze up, miss the actual price movement, or simply resort to gambling. Building a professional trading workflow doesn't mean finding the perfect combination of 50 tools. It requires ruthless subtraction. To actually see the market, you have to clear the canvas. The first step is taking your workspace down to absolute zero. Strip away every indicator, every oscillator, and every line until nothing remains but empty space and raw price action. This diagram illustrates the basic unit of that raw price action, the Japanese candlestick. It gives you exactly 4 pieces of unarguable data for a specific time period: the open, the high, the low, and the close. Once you map out a sequence of these candlesticks, the larger market direction reveals itself. By connecting the lowest valleys, or swing lows, with a simple straight line, you have an immediate visual gauge of an uptrend. Within that trend, price will constantly hit invisible ceilings and floors. These are support and resistance zones. They mark the specific horizontal levels where buyers and sellers repeatedly clash, fighting for control of the momentum. When that momentum pauses and pulls back, a Fibonacci retracement grid maps out the math. It highlights key percentage drops, like 38 or 50%, where the price is statistically likely to find support and reverse back into the main trend. Master these basic drawing tools first. They provide a comprehensive map of what the market is actually doing, without a single drop of algorithmic noise. You can eventually add mathematical overlays back into your setup, but you must enforce a strict limit. Stacking more than 2 of these indicators overcomplicates the math and creates loops of conflicting data. This chart visualizes a dual exponential moving average. It uses a short-term and a long-term curve. When the faster short-term curve arcs above the slower one, the space between them glows neon green to confirm a clear upward shift in momentum. Below those curves, you can add a relative strength index, or RSI, to track the speed of price changes. When this waveform violently hits its upper or lower boundaries, it signals the current trend is approaching exhaustion and a pullback is imminent. To keep this minimal setup organized, narrow your focus. Grouping major currency pairs or specific asset classes into tightly curated watch lists prevents you from endlessly scanning random charts. Next, automate your attention. Instead of staring at the screen for hours, set price alerts slightly before the market reaches your key support or resistance zones. This gives you time to open your laptop, analyze the structure, and decide without emotional rushing. Saving this exact layout, a clean chart, 2 indicators, organized watch lists, and smart alerts, removes the anxiety from the process. You stop reacting to every tick and become a proactive analyst waiting for precise, predetermined triggers. Even with a perfectly clean chart, there is one last layer of clutter you have to filter out: other people. Modern platforms are packed with social idea streams and crowdsourced opinions. It is incredibly tempting to use public social feeds as a shortcut for trade signals, but the posting traders are not responsible for your capital. True accountability and long-term survival in the markets demands totally independent analysis. The best way to build confidence in your independent analysis is backtesting. By rewinding the chart and stepping through historical data frame by frame, you can practice your stripped-down system without risking a single dollar. Compare the 2 approaches. On one side, you have an unreadable knot of data that forces you to guess. On the other, pure price geometry that tells a clear, actionable story. You don't beat the market by having more information on your screen than the next person. You win by filtering out the noise and making decisions with absolute clarity. To apply this minimalist framework in a live environment, open an FXNX One account. Pair your interference-free analysis with institutional execution speed and start trading exactly what you see.